topic, we'll discuss on the impact of COVID-19 in the trade finance industry. Now, we welcome on board our panelists, Mr. Zohail Zali, Regional Commercial Director and Managing Director of Bangladesh and Pakistan at Tradewin, Ms. Manpreet Kaur, Founder and CEO of Vivanta Capital, Mr. Graham Bright, Head of Compliance and Operations at EuroExim Bank. I will now hand over to our moderator, Ms. Maham Siddiq, the Regional Marketing Director and VP of Commercial, Trade with Finance.
Thank you. So I'm very confident that we'll have a very lively discussion. So let's move forward. I would like to start with Ms. Manpreet. Ms. Manpreet, you are closest to your clients in terms of understanding, their financing requirements and finding the right solutions. So on the basis of the opportunities that come to you, what do you feel are the characteristics of trade finance in India and globally, particularly since COVID has begun? So just like a brief overview, perhaps.
Sure. So Maham, first of all, congratulations. I think your presentation was beautifully covered. A lot of the points which I wanted to talk about are already been spoken about. So to answer this question, I'll break it down into pieces. I'll talk about COVID impact on India in trade, and then how the economy has revived and what is now going forward. So I step back to 2020, March to May 2020, India witnessed the largest lockdown in the world. Factories, businesses, offices, everything was shut down. Now, the export and the import took a massive hit during that period. Our exports declined to almost about 35% and imports declined to 28%, which means there's a huge amount of trade finance gap and the general working capital finance which had emerged in that period of time. Now, having said that, when the lockdown opened, what is it that we were witnessing? We witnessed that the labor population had majorly migrated to their villages, their hometowns. So obviously there was a lack of manpower. We witnessed that the factories which were wanting to come into operational capacities perhaps did not have the raw materials or did not have the working capital to procure raw materials, because for a longer period of time they were shut down and they had to actually put the bills, but there was nothing which was coming in as cash flows. We witnessed that even if they were wanting to take financing from the local banks, while the local banks had liquidity, they were surplus with liquidity, but they were really shying away to lend at that point in time. So these were the impacts which were happening. We also saw a lot of delinquencies coming up. We saw a lot of NPAs rising up during that time. Hardest hit have been MSMEs, because on one side they have to pay to their suppliers to procure the material. On the other side, they have to receive from their debtors, right? And they were the ones who actually got badly hit because of the lockdown and because of the COVID situation. Now, moving from the operational aspect of COVID, now let's move to the financial aspect. What is happening in the banking world or the financial world in post-COVID or current COVID situation? Now, force majeure is one clause which we have always talked about, but this is one situation when force majeure was actually activated. In terms of our export contracts or any domestic contract also, we saw a lot of buyers actually using this, or even a lot of suppliers using this as a caveat to get out of a contractual obligation. So I'm sure even Tradewin as an organization, since you support a lot of export receivable, you might have also faced this, that this was one of we saw a lot of rampant increase in contractual obligation not being followed, be it the payment obligation from the buyer side or be it the performance obligation from the supplier side. And both of them probably might have their genuine reasons to back off. We saw insurance market getting very, very squeezed. We saw that the capacities which were there earlier pre-COVID world had drastically come down in terms of capabilities for underwriters to underwrite that insurance cover. That insurance cover can be for a sovereign or even for a corporate. And we also saw the cost of insurance drastically rising up to cover or mitigate that risk. In terms of banks, the trend for India right now is that a lot of the MNC banks are actually, they have stopped onboarding any fresh client. They are very happy to do lending to their existing portfolio, but they are completely mandated not to onboard any fresh clients. Having said that, now this is a grim side of financial industry and market. What is the silver lining to the dark cloud is that the emergence of these alternate financing providers. Like Maham, you also mentioned in your presentation, the rise of the fintechs. We saw the rise of factoring companies. We saw the rise of alternate financing funds, trade funds, hedge funds, who actually took this as an opportunity to provide solutions which are around trade finance, supply chain finance, and a new thing which is structured trade finance. So from a traditional trade financing, which has historically been receivable financing or payable financing, we saw a new emergence of asset class, which is structured trade financing. Because the risks that we used to see pre-COVID were very lopsided towards probably a liquidity risk of a counterparty or a commodity risk of an underlying trade. But now we are not even dealing with those, we're dealing step ahead of that. We're actually dealing with the sovereign risk. In past 1 year, we have seen many countries which have defaulted. We have seen countries in Africa like Zambia, there have been a Eurobond default. So it's also about the sovereign risk. How is a sovereign going to perform? You know, we're talking about the performance risk. Earlier, we never doubted the suppliers, even if they had a good credit standing or a relationship between supplier and buyer. But now we are actually doubting the capability of a factory or a supplier to actually have that wherewithal to manufacture and supply on time. We are seeing systematic risk. We have never had the question of a going concern ever in the history. This is the time when we are actually asking whether this organization will exist for coming months or coming years, because in the past 1 year, we have actually seen a lot of companies have declared bankruptcy voluntarily, or they have been taken to NCLT through their creditors, right? So the very existence of the companies are currently under question. So this brings a lot of systematic risk in the trade finance market. There's a high risk of liquidity. Obviously, there's a high risk of default, which is their performance. So everything in terms of risk assessment, when a lender is sitting on a particular case, they have to actually see everything, you know, which was probably earlier was not a perspective. Now, coming with that, obviously, there have been operational challenges because even the bankers are not going to offices. They are sitting in their homes. Working staff is not going to office. Everybody's sitting in their homes. So there's a lot of operational challenges, which has made the process of lending a little bit slower as compared to when pre-COVID world. Now, this is all the reality that we have faced in 2020. Now, what has happened? The brighter side of this is complete digitalization. Not even the banking sector, the non-banking sector, the industries, the corporate, even the MSMEs, everybody has realized they want to move from a paper-based economy to completely a no paper economy, you know, right in terms from signing the e-contract to having an e-invoice to having bills of lading which are electronically signed. So all of that, I think, it's a very big bane, which I will say, which COVID has probably caused, that the mindset of every individual is right now supporting digitalization, you know, something which there was a change management issue. People used to resist this change, but now they understand the importance of sitting on their laptop and managing everything which is digital, right? So that has been a very big bane, I think, because of whatever happened last year. Also, in terms of alternative asset class, when I say even banks are being a little bit risk, you know, they are being very conservative to risk, but then there are these hedge funds, there are these trade funds who are very actively now looking at trade finance asset as an asset class. They might not be doing a primary lending, which means they might not be lending to a counterparty directly, but they might be acting as a funds of funds. They may probably try to fund an existing factoring company or an existing fund, which is already having a portfolio of trade finance. So that is again an asset class which is emerging, which is completely a transformation which was not there earlier. And in the end, what I'd like to probably say is summarizes that every crisis comes with it bringing a lot of opportunity. So while we are battling a gloomy environment, we are facing job losses, there are loss of our loved ones. At the same time, I think it's a time to pivot. It's a time to be agile. It's a time to think about different business models. And there are things which you could do in a different way to come up and brave out the situation? So a long answer for your short question, Maham.
Yeah, thank you, Manpreet. Thank you. Excellent. Thank you for sharing. I would like to take this over to Mr. Graham now. Mr. Graham, it's no secret that household consumption patterns have changed. Transportation is deeply affected as well, and retail business, of course, has taken for the worst. How do you see the shift in direct demand towards consumption of goods going forward? How do you see the shift going forward now? What do you see?
Well, thank you very much for the introduction there. I'm Graham Bright. I'm based in London, so it's now nearly 8 o'clock in the morning. Welcome to everybody in India. And again, we hope everybody is safe and well through this appalling time and hope it's going to be resolved as soon as possible. From our perspective with EuroExim Bank, we're a trade finance specialist. We provide the instruments for the SMEs in particular in order to do their import activity. Now, what we've seen at the moment, for example, from the United Kingdom and the other areas in which we operate, again, through the COVID period, many people, again, have not used transport in the same way they have. They're not using buses, they're not using trains, they're not paying for those particular services. So in the UK in particular, we're seeing a huge amount of domestic capability and holding of funds, which is almost ready to go back out into the market whilst we've had lockdown in those markets. Our essential shops have been running for some time. Our non-essential shops reopened last week. So from a period of almost no sales in the commercial market, we've seen a startup, very much people wanting to go out, start spending money that they've accumulated in those pots. The issue is that as far as trade is concerned, trade has continued. There's no doubt that international trade has still gone on. And from our perspective, we've seen an increase in the number of clients coming to us where there has been a decrease in their opportunity to work with larger institutions who have been de-risking, merging, and literally taking away the opportunity because of low volume and higher risk perceived in order to do international transactions. An excellent point just before was lack of liquidity in those markets. We deal with Africa, for example. Domestic banks are not supporting small institutions to help them with import. And again, that great question, are those industries or are those companies going to be in existence in 3 months' time, 6 months or 12 months when you're looking at a 360-day instrument? So we've got to do our compliance, our due diligence, our work with those companies. And exactly as said right at the beginning, we can assist those companies to ensure things are in place, but we must not stifle entrepreneurial flair. We mustn't stop the small companies from taking the opportunity to do export and import in their particular markets. So we are seeing continued trade finance activity. We believe that there's going to be a greater increase in that. Certain industries have not been challenged at all. So from the point of view, food, drink, and other industries, in particular, chemicals, PPE, other type of industrial goods, pharmaceuticals. So for perhaps the wrong reason, their goods and services have been on the increase throughout the whole time of the pandemic. But we are going to see more raw materials coming from Africa at a different price. The Make in India is going to be certainly a big factor coming up. But one of the other key factors is how goods physically move between different environments. Remember, if we're moving goods from Africa to India, it's almost the equivalent of moving from Kerala in the south of India to the north of India in terms of physical distance sometimes. So we've got to be very careful when we talk about going across state, across country, across landlocked countries to a port, for example. And we still have that problem of local liquidity and the cost and sanctions as you move goods across border. So there are issues, very big issues there. We know there's a limit in the way of support is offered to small companies. We know the capital is very much stifled at the moment, and we need to find appropriate collateral for the smaller SMEs to actually build their business. Because we believe that it's not the governments working with ECAs or other big infrastructure projects, but the SMEs who are going to drive recovery in each of the economies. So it's very important that we support those particular institutions. We already work with the SME Chamber, for example, and aware of alternate financing, because we provide the instruments. We don't do the physical financing of that transaction. So it's very important, again, that we look at the documentation to ensure that all the parties in the transaction, of which there are many, all are working as one collective. Another very good point was made regarding the digitization of documents and the moving to digital. And we believe also that by implementing a technology enabler, such as blockchain, in our environment, that we're then able to move the information in a much smoother way, a much faster way. We can handle the compliance in a much faster way. We can onboard clients in a better way. And hopefully that will also promote international trade. So things are not on hold. All we see now is, hopefully, as you say, the UK is moving out of lockdown in the second part of that lockdown, that trade is improving. Things, of course, were not helped by a little blockage in the Suez Canal. So we've also got to look at other man-made issues as opposed to perhaps a more natural cause there. And we've got now containers in the wrong part of the world. We've got goods waiting for raw materials to arrive in other parts of the world. So we've still got a catch-up period. But apart from that blip that we had last month, what we're looking at still is being able to support smaller industries on the import side with letters of credit, on the export side with financial guarantees and tenders. But remember, we believe it's not just the large companies, the international companies, mega companies who are going to drive growth for the future. It's the smaller companies, it's the smaller entrepreneurs being able to get hold of the right level of financing to make sure that they can provide the goods and services and promote the economies moving forward.
Wonderful. Thank you so much for the detailed insights, sir. And for both ends of the banking side, as well as for what the exporters must consider. So I would like to take this over now to my colleague, Mr. Sohail Zali. Sohail, you have a bird's eye view on your region, and that includes India as well. You look at the commercial activities over there. So in terms of trade behavior and concerns, what do you believe is in store for India when we speak of future trade opportunities?
Yeah, hi Maham, thank you very much. Hi everyone. So I actually want to touch base a bit about the COVID impacts on the trade and the future in India. Mrs. Manpreet already touched base a bit about the impact. But first of all, we all know that the pandemic has a significant impact on the economy and the trade globally. And when we look at the India sector, it is significant to look at the GDP forecast. When we see that, for example, the World Bank already forecast a 9% GDP, minus GDP for India, where the State Bank of India already forecasted -7. When we combine service and merchandise and focusing then on the trade deficit, we can see that from the last year, April to March 2021, where we are now, the trade deficit in India was by $14 billion, where compared to the last year, the trade deficit was 10 billion in 2018 and 2019. In order to understand better the impact, let's look at those the GDP sectors on each sector in India. We can see a negative trend in the hospitality, of course. Then we see the trend, negative trend in construction and real estate, and followed by manufacturing. Manufacturing, of course, we see a bit more a positive impact in Q2, since the European countries, US, are rolling out the vaccination much more stronger. We see that the lockdown getting eased. So we have a hope that the manufacturing, especially the apparel industry and auto parts industry manufacturer, increase in Q2. The only sector is actually what has a positive impact, and we see a positive trend, is the agriculture. Agriculture has a positive trend in we see for the Q1 and Q2, of course, but the pandemic is expected to affect the agriculture market. over the next decades, and since slower economic growth has actually an impact on the food protection, food production, formal live food, and greenhouse gas emission. Having said that, we saw actually a positive sign and signal in March, where the export actually increased 60% and the import increased by 50%. Unfortunately, we're not gonna see, I believe, the trend for the next couple of months, since we enter in India in the second wave. Thank you.
Thank you so much, Sohail. Thank you for that. That was very interesting. Ms. Manpreet, I'll come back to you. Your company, Vivanta, Vivanta Capital, is, it supports trade finance requirements for clients in India as well as globally. So your company is a startup MSME itself. So may I ask, how did your business specifically respond to the crisis? What steps would you recommend, would you advise other MSMEs to consider? You're on mute, Manpreet.
Sorry, can you hear me? Yeah. So like I was explaining, that because of the lockdown, everything was shut down, and obviously the trade finance, which is our core activity, because we are currently an offline platform and we are offering supply chain finance, trade finance, and structured trade finance to clients all over. Now, what do you do if the trade is not happening, if everything is in a lockdown situation, right? Our main business is absolutely impacted. And during that time, being a startup, we actually pivoted a model. So we figured out that apart from a conventional supply chains of commodities and goods, there was a new supply chain which was emerging. And those supply chains were supply chains around medical equipments. There were supply chains around PPE, around test kits, around vaccination, right? And that was an opportunity that we thought is something which is right now here, and it's going to be staying for a long time. So as a model, we actually entered into the distributorship and outreach for these supply chains, and we actually ended up doing some bit of transactions during the time when our core business was absolutely shut down. Having said that, I would again like to say one thing, which is my personal experience as a startup founder. And I think a lot of the MSMEs and even the mid to large companies will probably resonate with it, that this is just not one black swan event. I think we have to accept this reality that in times to come, there will be many such events which might come. So again, we have to think about what is a business model, how agile it is, and how strong it is to overcome any such black swan event in future to come. Obviously, agility is there, the ability to pivot your model. Are you actually putting all your eggs into one basket, or do you have the capability to hedge your business risk if something like this ever happens again, or this period gets sustained to a longer tenure? In terms of your operational, how are you operating? Your entire operations have to get overhauled, because we don't have the luxury now to go to offices. We don't have the luxury to meet clients. We don't have the luxury. Everything has moved to a Zoom. Even this conference is right now happening on a Zoom, which is something which we would have never imagined in the past. So the way business is conducted has completely changed. And the more adept we are to that change is going to be, it's basically the survival of the fittest right now. So it's a survival time. In terms of digitalization, I've already spoken about, and that is not something only the large enterprises are following. I have seen a lot of startup founders. I have seen a lot of MSMEs also who are trying to actually digitalize their processes in their own sweet little way. And I think that is a very good initiative, because this is going to pay them in a very, very long way coming forward. Liquidity is always the king. This is something which our forefathers and everybody had taught us. And 2020 has actually taught enterprises and businesses that their cash flows statement is the most important statement, in terms of how much liquidity they actually have, because there would be some dry patches and some dry runs, which can go into months or into a year as well. How do they survive in that period of dry when there's no revenue getting into the business? So liquidity again is the king. In terms of risk assessment, it's not just the lenders, it's just not consultants and advisory firms like ours. I think as a small enterprise, as a startup, even the founder needs to assess the risk. If they're buying from a supplier, what is the capability of the supplier to continue to supply to them, even after being impacted from COVID? If they're selling to their buyers, how good the buyers will be to pay them back. So from a startup or a MSME perspective, I will also request everybody on the call right now, just do not delegate your risk mitigation strategies to a consultant or a banker. Please take the complete control yourself. Sit down again with your accounting team and your finance team, reassess your portfolio, reassess how much percentage of buyer portfolio you have. Are you selling to only a particular client? You have a homogeneous mix of clients. So all of that is a risk mitigation strategy, which every company, be it a mid-size, small size, micro, or a large enterprise, will have to do that. So these are few things: agility, pivoting your model, cash, liquidity, risk assessment, digitalization. So these 5 points are the things which I think are the key takeaway for everybody currently to come out of this situation and to brave it.
Thank you, Manpreet. That was excellent. Thank you for breaking it down to such a granular level for all of us to understand. I'll bring this back to Mr. Graham. Back to you, sir. So this is a burning question for a lot of us, everybody, the trade finance community, and as well as the MSME community, everybody. I wanted to ask you, do you believe that there are any business sectors that have remained and continue to remain unaffected by COVID?
Yeah, I think if we go back to the answer I gave before, certainly chemicals, food and drink, totally unaffected. I think we're going to see also a rise in the number of electric vehicles. So as the manufacturing is going to switch into that particular area because of government policy. In terms of production, agricultural production of food, we're looking at new inventive ways of that industry coming about. Vertical farming, for example, which is providing more quality, more quantity with less effort. One thing I would really make a point on is that in the UK in particular, we're going to have a particular problem coming up from September, and that is the end of our furlough scheme. So where employees have been provided with funds, government funds, to supplement those of businesses. And when that happens, I think what we're going to see is with digitalization, digitizing of documents, making sure individual companies have taken this opportunity to become much more agile through this period, we're going to see very high levels of unemployment coming up. And some sectors of the community, perhaps older workers in particular, already feeling the crunch from that. But we also see a shift towards new startups and the things, for example, using internet services for drop ship services. So it's when you don't actually hold product at all, that you produce a business which is advertising products, which is then waiting for demand, and then you satisfy that demand by directing import and export accordingly. So it's a slightly different model, and we're seeing a number of very, very successful businesses starting with very little in the way of cash flow because they're paid right at the beginning of the transaction, and their obligation is to provide the goods from a particular point in the future. So it's a very good cash flow model. Manpreet's point, absolutely. Cash flow drives the business. And again, what we're doing is very much being sensitive to where the investments are being made, to see whether our clients have the intent and the means to pay, which is the important part throughout the transaction, and also identifying everybody in the ecosystem of trade. Because unlike a payment transaction where I can pay into your account, I need a debit or a credit or a reference and an amount and a transaction account number. Here in ecosystem of trade, we're dealing with 10, 15 different players as we go across jurisdictions, across legalities, across regulation, etc. So it's a complicated business. And I think what we need to be very aware of is that smaller companies do need to take advice from companies like Tradewind, companies who are available to provide that second level. For example, if you were ill and you go to one doctor and the doctor says one particular a diagnosis. You may say, I need a second opinion. And very much in this market, if you're not familiar with these types of requirements, with the export requirements, sanctions, PEPs, AML, KYC, due diligence, if you're not familiar with those and it's the first time of doing a particular trade, you want to be competitive in your market, go to the advice of experts. And that's what we would really, really try to stress as much as possible in this market. 200 million companies in India. Well, that's an awful lot of business there. And are we saying they all have the right level of expertise and experience to help them on that journey as they start their import or export business? So here, the message very much is experts are there, consult with the experts, take the advice, do your own due diligence right at the beginning as well, and through the transaction. It's not a one hit. Everything we do has to be throughout the transaction. So it's constant monitoring, understanding where the goods are, tracking the ship where it happens to be, understanding who's involved in each part of the transaction. And at that point, I think there'll be much more confidence for smaller companies to actually do that part of business. Even though large banks, for example, BNP and Paribas are pulling out in certain jurisdictions, Citibank, we know, is shutting down the retail part of the business and looking at investment management. Yes, liquidity is hard to get, but there are people specializing in the business. It doesn't need a large bricks and mortar bank in order to get that facility to enable smaller institutions to be competitive.
Wonderful, sir. Thank you so much. That was very insightful, very educational for all of us. Really appreciate that. Sohail, could you shed some light on how alternative financing works, innovative financing, and how would that apply to the MSME community? And if you could also just supplement that with perhaps a case study or like a live example that you're working on as we speak, that would help.
Sure. Thanks, Maham. Yeah, I think this is what we all discussed today was more about that the challenges what SMEs are facing. I think Mr. Graham has already mentioned as well that actually SMEs in India and around the world are facing liquidity crisis, a credit crisis. So what we see is actually, it is not only an India issue, it's actually a global issue from my point of view. And the recent survey has actually shown that SMEs around the world having an unmet demand of $9 trillion US, which actually the low traditional banks cannot meet. So that is actually the issue with which a lot of SMEs around the world are facing. But we see, of course, a lot of SMEs who have actually a good approach, especially in India, where they keep the bank in check and looking to build up new way to build additional liquidity, as cash is the lifeblood. So that is I think that is the right approach. And one way for the growing SMEs to build the liquidity is actually using the factoring as a technique. Factoring can provide the perfect financial solution, which grows as the company grows. So and let me show you, because there was one question today in the morning. One participant asked how actually the factoring works. So let me give you guys a brief process, a flow chart how a factoring can work, traditional factoring. So basically, the trade finance confirm a limit, provide to the customer of the client, and the limit which the exporter get from the trade finance company, Tradewin or whoever, he's then able to ship the goods. Once he ships the goods, he actually provides to Tradewin the documents, and we pay advance 90% and plus the credit protection in case of bankruptcy. What actually the buyer are enjoying here as a benefit is the longer payment terms. So we can talk about 60, 90, and 180 days of credit terms, what the buyers can enjoy. And we're gonna have one live case, which actually we recently came to these agreements, which actually during the pandemic, the payment terms increased. So just to go to the final of the transaction. So once we pay to the supplier, their customers pay at the majority date to TradeWind, and we pay the rest, the balance to the supplier. So there's a very short introduction how a trade finance company can work. And allow me just to give you guys a quick case study. Actually, this is a auto part manufacturer in India, and they were exporting to Europe and US. We actually signed these agreements and came as a partner in July 2020. Actually, that was before, and I said that in the middle of the pandemic. The situation was that the debtors actually demanded a credit term of 150 days. And when you look at the pre-COVID situation where the payment terms were 60 and 90 days, this challenged, of course, our clients who has to meet their raw material payments, the fixed costs, and because of the bank lines was utilized, he had a cash flow crisis. So when we provide them a 5 million credit term for the export, and we allow him to export based on 150 days payment terms, that was and backed by the insurer. And as I mentioned before, we pay 90% advance. That actually give the client improved position in his liquidity, and the additional cash actually channeled back into the company to achieve better growth. Yeah, so that was a very live case which we actually have in our company, and shows actually the right example, especially for SMEs, how to work with a trade finance company and how to secure themselves with a third-party insurance.
Great, thank you, Sohail. So I think we're a little bit short on time now, so I just wanted to check in if we have any questions from the audience. Just a minute. I think I might need some support with reading out the questions.
Sure. Yes. So we have our anonymous attendee again. The questions: Hi Manpreet, TradeWind, Graham. Just to understand from your experiences, whether the bank or trade finance companies are supporting MSME for exports in Africa, South Asia, South Asian regions without collateral.
Would you like me to take that one? Wonderful question. Unfortunately, we don't do any trades without collateral of some sort. And I'm not sure that any company would be in a position to do that, but I defer to my other panelists there. Everything has risk. And if we're not, even for small amounts, without trust, without confidence, without going through a full due diligence process, we would not be in a position to provide any instruments without some form of collateral, not necessarily in terms of cash or in terms of proof of funds, but in terms of either an asset or something like that which is approved for that particular transaction. But to say, I defer to my colleagues to answer that particular question.
I'd like to take a shot on that. Thank you for that question. Just like I mentioned while I was talking, that the buyer country risk is very, very important. So when we talk about buyers in OECD countries compared to a buyer in Africa or a buyer sitting in South ASEAN, the entire risk perception completely changes in the mind of the lender. So from a risk assessment perspective, if you ask me, it will be a very high risk country to support a buyer. Having said that, I would also like to give good information here that there are some bilateral trade programs between India and African countries. There are also bilateral trade programs between India and South Asian region. And under these bilateral programs, there are a lot of lenders and there are support by ECAs and EXIMs, whereby such transactions, if they are in the nature of CAPEX, can be undertaken. If it's in terms of working capital requirement, then there are a lot of these African lenders which support imports coming into Africa or exports going out of Africa. I'm happy to for you to reach out to us at Vivanta Capital. We will be more than happy to guide you through this and to structure this solution for you.
Well, thank you so much, everyone. Now I would like to welcome our next set of speakers and our next set of panelists to discuss on another vital topic. Before that, we just have one last question from Rana Wakas. It actually says, no questions about being agile and digitalizing financial institutions, but are we thinking about the other side of the aisle, the customers? Are they ready to move from paper transactions to e-transactions? And as Tradewin Finance is all about heavy paperwork.
I would like to take this question to answer. So when we look at the customers, if customers are able or the clients are moving, yes, I would say this during the pandemic restriction, organization and even people, I mean individual, shows that they can adopt the rapid changes. So I think with the clients are able to move ahead, even Tradewin, and we are having the adoption of digitalization and moving to more paperless work. So it is something which it does not only depend on the importer or exporter. I think every party need to adopt the changes. Innovation is very important aspect which we have in our future strategy, and that is something what we're going to look into that for the future.
Thank you, Sohail.
Just a very, very quick one on that. Our view is that the clients, if we are onboarding them, it's very much more a paperless online process. So that's becoming much more familiar, and as banks then onboard their own customers with new accounts, etc. And so trade finance is going the same way in the provision of documents and the actual digitalization of those documents and the sharing of those documents. However, the caution I would give is that whilst we would hope for a paperless society, at the moment we're going for less paper.
Thank you, Graham. Well, on that note, I'd like to thank everyone for their insights, and I would like to welcome our